PayPal will be reporting earnings on January 29th, 2020 after market close. I just sold a put spread on PayPal ahead of the earnings tomorrow. Before I get into the positions I opened, let's review PayPal stock for short-term trade. As of this writing, PayPal has a strong buy rating with 31 analysts recommending buying the stock and 6 analysts with a hold rating on PayPal. There are also 3 overweight ratings and 1 underweight rating on PayPal. The high price target for the next 12 months is $148 with a low of $105 and an average of $130.33. With the current price at around $116.60, PayPal has a potential upside of just under 27% and a downside risk of just under 10%. The average price target of $130.33 gives PayPal an upside of 11.78%. Keeping in mind that this is based on analyst prediction, which may or may not happen. Analysts are expecting an EPS of 83 cents for quarter 4, which is 23.8% higher than the expected EPS for Q4 of 2018. In that quarter, the actual EPS was 69 cents against the 67 cents expected. Over the previous 4 quarters, PayPal earnings per share has been better than expected. A quick disclaimer at this point, this is not a recommendation on trading PayPal or any other security. This is only a review of my analysis. If you are planning on trading PayPal or any other stock, please do your own thorough research and analysis before entering a trade. Given the positive outlook by the analysts, I decided to trade PayPal in my paper account, not the real account. I could buy 100 shares of stock, which would require $11,660 in capital. Instead, I decided to take an options route. If the stock price is likely to go up, buying a call could result in a profit, but with a much smaller capital requirement. However, I don't generally like to be long in options due to time decay, which tends to work against that position, unless there is a significant increase in price or a significant decrease in price if you are long put. So instead, I decided to sell put options. Usually, I like to sell options 45 to 60 days out, which could potentially give me an opportunity to adjust my trade should my directional assumption is incorrect and the stock goes in the opposite direction. However, in this case, I wanted to test both my short-term expiration and my usual long-term at 52 days to expiration. For the contract expiring this Friday, January 31st, I sold a $2 wide put spread, selling a $111 strike and buying a $109 strike for a credit of 33 cents. This required a total capital of $200 for one contract versus over $11,000 that I would need if I were to buy 100 shares of PayPal. Of course, my upside is also limited to $33 if the spread expires worthless, and if that were to happen, it would be a 16.5% return in less than 4 days. For the contract expiring in 52 days on March 28, 2020, the put spread was $5 wide with a 53-cent credit. I will most likely close the position before it expires, but I am looking to get about 50% of the credit or about 26 cents, which would give me 5.2% return. This assumes that PayPal price increases or at least not drops below my short strike. While the return will be lower and will take longer, the longer time frame will allow me to possibly adjust the trade if the stock price moves against me. Hope this was helpful, and I will see you in the next video.